Ashutosh Limaye, who's head research and the real estate sector rather at JLL India, joins in with his perspective right here in our studios. Ashutosh, great to have you in the show. Thanks very much for taking out the time. You think this is a demonetization effect which is lingering?
Absolutely. I think it was expected that the quarter is going to stay a week because we simply did not see enough activity on streets as far as residential market was concerned. January and February were indeed very weak. We did not have much transactions. March it started picking up again. Buyers started venturing into the market once again. The inquiry stage began. We had developers finding visitors, but the transactions did not take place because real estate is one sector where you don't really buy on the counter. So you need some homework, you need site visits. So we do hope that the process that has started in March will help us record sales in the coming few months. But the first quarter of the calendar year, very, very weak, a 6-year low in terms of sales.
Ashutosh, you spoke of the month of March seeing a significant pickup in registrations, but would you brush it off as perhaps an end of the year phenomenon, or is there a material pickup?
I wouldn't say it's a material pickup. I think it's just about the sentiment now which is started turning positive. The 2.5 months, everybody was in a state of shock and people were figuring out what to do. Now people have started coming back to the market. There are enough buyers in the market. Now they have understood the situation. They have understood that the developers are going through a stage of consolidation. We will have now fewer but more serious players who will now remain active in the market. The risk levels are going to come down with RERA getting implemented from May 1st. So now the industry is going to be much more organized and rational. But it will be a smaller industry for initial few months because the non-serious developers are going to exit the space.
Will prices come down, Ashutosh?
Unlikely as a general phenomenon, but we will always find pockets and projects where developers will offer discounts because they have understood that a clearance sale kind of initiative needs to be taken to really offload the work that they have already constructed. So we will have projects like those. So I would urge buyers to really check the financial health of the developer before buying into those properties which are offering good discounts. But by and large, the price will not come down because the compliance cost is going up. The holding cost for developers is going up because they can't sell unless they have all permissions in place from May 1st. Land prices have not really come down, especially in the city areas. Fringe areas, yes, they have started coming down. So by and large, prices will hold. There will be pockets and projects which will have discounts in the offering. Buyers should check the risk levels there before buying. And the good developers, the ones who command trust from the market, in fact, the prices will go up because there is so much of demand that is getting converged to those developers that there is a serious demand-supply mismatch and the prices there should go up actually.
I just want to stretch it a little bit more when it comes to prices. Let's talk about, not just Mumbai specific as well, but across the country as well, any specific price trends, and then I'll come to registrations.
Yes, I think all cities have shown that the new launches that have happened at very competitive prices. So if you look at price for a newly launched project versus the price in an under construction project, the launches are at a discount. So from that perspective, we can say the prices have come down. Also, there are specific projects where only few units have been left for selling. Developers are kind of selling it with deals. So as the project then moves out of the RERA basket once all sales are done. So from that perspective, yes, prices have come down, but by and large, prices are holding.
And do you see this low home registration figure even for markets outside of Mumbai, or is it largely the metros which are witnessing low demand?
The low registrations is found across cities. It's not that metros are only seeing it because demonetization impacted everybody. All cities were impacted, but the metros got impacted a bit more because the investor contribution to realty market was more in metros. than some of the smaller cities or some of the cities in South India which were more driven by end users, the salaried class purchases. Delhi NCR was hit the highest because the investor percentage is highest there, followed by Mumbai, whereas the southern cities were not as hit as these two big metros.
Also, give us a sense on if somebody was looking to buy in the markets right now, and if a viewer was tuning in to get your perspective on the same, should they be going in for a high-end established builder? Some of the tier 2 builders are also improving their execution capabilities, given the kind of money that's flooding the sector, and increasing the holding power, thereby also improving the quality of execution and building materials, so to speak, for real estate developers.
That's right. I think you brought up a good point and a valid point too. We have seen standard of real estate industry, standard of construction, standard of corporate governance in development companies has been steadily improving, and demonetization actually added momentum to developers getting the compliance systems in place a lot sooner than they would have otherwise done. So I think from a buyer's perspective, they should check two things in my view. First is what's the track record of the developer. That's a very big and obvious indicator of the risk levels involved. And second, if there is any participation of institutional equity. If any institutional equity has taken a part in that particular development, one can be assured about transparency, about financial prudence, discipline in terms of cash flows, and basically respecting the buyer's expectations and sentiments. So I think these are the players which will deliver and which will actually respect the buyer's requirements. Buying into under construction property, great idea, because you are getting very competitive rates, but just make sure that the developer has track record, and even better if they have institutional equity as a partner.